Hello everyone. The problem I have chosen is the first problem, plan of action for adopting the US digital dollar, and the organization I have chosen is JP Morgan and Chase. JP Morgan and Chase has announced its plan to issue a deposit token JPMT in a few days on the Base public blockchain founded by Coinbase. This positions JP Morgan as the first major US bank to enter public blockchain-based deposit tokens, which provides a first-mover advantage. These steps align with global trend towards central bank digital currencies. JPMD provide a commercial bank with a method to digitally represent deposit on a blockchain. This mirrors features of potential CBDC such as faster settlement and enhanced transparency in transactions. Through this innovation, JP Morgan strategically positioned itself to play a role in the evolving landscape of digital money, demonstrating a forward-thinking approach to the future of financial transaction. Moving on to next slide, we have all the points which we will be discussing in coming slides like key insights, SWOT analysis, risk categorization, JPMC strategic position in digital asset landscape, retail and wholesale CBDC, implication and solution to remain USD as the top reserve currency, positive and negative impacts, recommended plan of action to implement CBDC, and we will summarize in last. Moving on to next slide, we have key insights into financial transformation. This slide is to discuss the rapid evaluation of global financial landscape. The financial service industry is currently undergoing a drastic transformation shaped by factors such as increasing customer expectation, intense competition, and a high reliance on technological advancement like AI and machine learning. Also, blockchain. The increasing interest in central bank digital currencies by central bank is one of the most significant changes. The shift towards a tokenization monetary system, including CBDC, stablecoins, and tokenized commercial bank deposits. It's leading to structural transformation where digital innovation merges with finance. Entities that have developed strategies to benefit from this shift are gaining a substantial competitive advantage. JP Morgan has been proactive in this space and has pioneered digital assets, leveraging blockchain technology with JPM Coin, which is built on a private blockchain. It's tailored to institute client with the aim to simplify and to enhance the wholesale payment process. This demonstrates enormous transaction efficiencies and trust blockchain offers with a working asset already in place and significant investment made. Strategic recommendation center on robust technology investment combined with adherence to international regulatory standard and engagement. Collaborative efforts and a multifaceted strategy are crucial for ensuring continued success in this evolving landscape. Moving on to next slide, we have SWOT analysis where we are discussing strength, weakness, opportunities, and threats. JP Morgan's strengths are its existing infrastructure and market leadership and the technological advancement. Its weakness is integration complexity. Path to widespread central bank digital currency is not without obstacle of integration. A key challenge lies in the inherent complexity and a lack of standardization in integrating new CBDC system with existing legacy financial infrastructure. This complexity can lead to disruption in current operation and hinder the management of existing financial system. Despite the challenges, we have the adoption of CBDC presents significant opportunities for financial institution and the broader economy. CBDC adoption can unlock new avenues for revenue generation by facilitating more efficient and cost-effective payment system and potentially creating opportunities for innovative financial product and service built on CBDC infrastructure. We do have threats of regulatory requirements, government decision, economic changes, these may cause drastic loss of investment. Also, there is a fierce competition on movement to Web 3.0. Moving on to next slide, this chart illustrates various risks associated with central bank digital currencies and their perceived probabilities. The data indicates that cybersecurity risk and data privacy concern are as the most significant risk associated with CBDC, with 69 and 63%. Risk related to capital market fragmentation is 39 and impact on traditional banking is 37. The least perceived risk is chilling of private sector innovation. Moving on to next slide is JPMC's strategic position in the digital asset landscape. The global interest in actively surrounding central bank digital currencies is rapidly increasing year after year. In fact, over 90% of the world's central banks are exploring CBDC, with a significant number already in advanced development or pilot phases. This growing interest is driven by the rise of cryptocurrencies and the need for central banks to modernize their payment system and reuse financial stability. JPM Coin, a blockchain digital token from JP Morgan Chase, it aims to revolutionize cross-border payments and settlement for institutions. It leverages blockchain technology to facilitate seamless transaction, addressing the inefficiency of traditional banking system. JPM Coin is essentially a digital representation of USD, allowing for near instant settlement compared to the days it can take with traditional methods. The financial world is transitioning from Web 2.0 to 3.0, and initiatives like JPM Coin are acting as a catalyst in the shift. Web 3.0 is also known as decentralized web. It utilizes blockchain to create a more transparent, open, and accessible financial environment, enabling direct interaction without relying on third-party intermediaries. This move unlocks the potential of blockchain, including improved efficiency, reduced cost, and enhanced security for financial services. JP Morgan is expanding its footprint in the digital asset space, opens up exciting new avenues for innovative products and services. This includes tokenization of assets like real estate or intellectual property, enabling fractional ownership and increased liquidity. The bank is also exploring the use of stable coins, which are digital assets designed to maintain a stable value by being backed to reserve like US dollar. This can facilitate faster and cheaper payments. JP Morgan is also exploring decentralized finance, which leverages blockchain to offer services like lending and exchange without intermediaries. Moving on to next slide. This slide discusses the impact of retail and wholesale central bank digital currencies. It specifically focuses on their implication for JPMC. Retail CBDCs are designed for general public, aiming to improve the customer payment experience, while wholesale are intended for financial institutions, primarily to help them manage liquidity more efficiently. Moving on to the benefits of wholesale banking, these include a significant reduction in transaction and settlement times, substantial cost saving, increased transparency, and overall operational efficiency. These improvements directly benefit institutions like JPMC. Challenges in adoption for JPMC. The emergence of retail CBDC could pose a challenge to traditional banking model. However, wholesale are expected to streamline intra-bank transactions, directly influencing how liquidity is provisioned. Commercial banks, including JPMC, will need to adapt by embracing a new role as intermediaries and investing in new technology to stay relevant in this evolving financial landscape, especially in users gains direct access to CBDC. Moving on to next slide, the implication of USD and solution to maintain USD as the top reserve currency. In the implication, we have the international role of dollar as a unit of account. More importantly, as a store of value. is unlikely to be significantly affected by central bank digital currency, even one introduced by a stable and large non-US jurisdiction. This is mainly because the issuance of CBDC wouldn't directly impact the plentiful supply and liquid market for US treasuries and other debt, nor the long-standing stability of US economy and political system. The dollar position, the solution uh, do, for this is dollar position can be supported through organization like International Monetary Fund, World Trade Organization, along with strengthened alliances by key trading partners. Stable trade policies and collaboration on global economic challenges such as improving cross-border payments efficiency through international coordination on CBDC design and interoperability can further reinforce dollar central's role. Moving on the positive and negative impact. The negative impact is potential risk of deposits. JPMC faces the risk of customers shifting the funds towards directly to central banks by using CBDC, which could reduce traditional deposits and impact the revenue from cross-border transaction, overdraft fees, and its interest. We have the second risk is credit implication in tokenized economy. The bank is exploring new lending models potentially backed by blockchain-based assets, requiring refined risk assessment and allocation for these new type of assets. Third point is liquidity management with CBDC. It could enhance cash management by facilitating faster, more accessible and traceable transaction, enabling real-time settlement, which is a positive impact. And another positive impact is operational efficiencies. JPMC sees an opportunity to improve cross-border payments and reduce compliance costs through CBDC, as participating countries could harmonize regulation like anti-money laundering and know your customer standards. Moving on to next slide, we have recommendation plan of action for JP Morgan and Chase. It can implement a central bank digital currency through a careful staged approach, ensuring all parts of the organization are involved, including technology, security, and communication with those affected. The first point is JPMC clearly should define its goal for using CBDC. They can gain valuable insight by studying CBDC program already implemented in other countries like China, Digital Yuan, the Bahamas Cent Dollar, and Indian's E-Rupee. JPMC should also look at finding from research projects like Federal Reserve of New York Project CEDAR, which focused on using blockchain technology for cross-border payments. Project CEDAR's experiment showed that blockchain can be used to make cross-border transactions faster and more secure, settling payments in less than 15 seconds compared to the current 2-day standard. Atomic settlement, which ensures transactions are either completed entirely or not at all, can also reduce risk. The second point is JP Morgan Chase must invest in necessary technology and infrastructure, ensuring the CBDC architecture meet high-level technical requirements such as those outlined by Bank of International Settlement Committee on Payments and Market Infrastructure and the Market and Technology Group. These requirements emphasize features like a modular design, essential function, operational and cyber resilience, and consideration for third-party services. Cyber security is also a top priority to protect integrity and confidentiality of CBDC system. They should implement industry best practices including robust security checks, strong encryption protocols for data, and secure landing of API used to interact with the CBDC system. Staff training is also essential to prevent human error and keep up with the evolving threats. Regular security audits and proactive threat detection are vital to stay ahead of potential vulnerabilities and cyber attack. Moving on the next slide, which is continuation of recommended plan of action. JP Morgan Chase aims to become a leader in the financial industry by combining comprehensive operational plans with innovative product improvements. To achieve this, they need to focus on implementing robust privacy and security measures when developing and operating a central bank digital currency. These measures must also ensure compliance with regulation like anti-money and counter-terrorist financing standards. Building public trust and awareness of CBDC is crucial and can be achieved through effective communication and education initiatives. Finally, JP Morgan Chase should explore new opportunities with CBDC ecosystems such as subscription-based services or smart contract-enabled cash management. Moving on to last slide, this summarizes key findings and potential risk associated with central bank digital currency. It also offers recommendation highlighting strategic strengths and outline JP Morgan Chase next steps in evolving landscape. For CBDCs to reach their full potential in transforming both domestic and cross-border payment across wholesale and retail market, they must integrate with a wide range of financial processes. JP Morgan Chase is already leading the way in digital currency innovation. To maintain this position and enhance influence over the transition from Web 2.3.0, emerging opportunities like on-chain product and smart contract cash services should be explored, while also proactively addressing associated risk. The digital dollar, as it's often called, hold promising long-term benefits for the digital economy despite inherent regulatory challenges, and it's poised for success. Through strategic positioning, JP Morgan Chase can further shape the evaluation of finance in digital age, unlocking significant value for clients and stakeholders.